Well, good evening, traders. Thanks for tuning in to this Monday afternoon market recap. What we'll do, we'll take a look at the three US indices, followed by a few of our individual trade setups, which we have and have spoken about in large detail for the week ahead. Today's trading session, largely bullish. However, I do want to bring your attention to this large upper wick on today's candlestick. Let me zoom on the detail before we get into the actual intricacies of today's session. What you can see actually is quite a nice bullish candlestick. Check out the volume coming into the market on the Dow Jones Industrial Average. But again, what I want to allude you to is to this very, very large upper wick. This is telling us that there is still some incredible selling pressure happening around this resistance level here and also occurring on the Fibonacci 0.618 retracement of this bearish sell-off which occurred in January. Something's telling me, or my gut's telling me, my hunch is telling me not to trade bullish in the face of such bearish price action and sentiment shift occurring in the market at the moment. And today's session, again, has left me feeling, I guess, a little withdrawn from the bullish rally. And I'm still anticipating some type of bearish reversal pattern. Again, we're set up for a 1, 2, 3 reversal. We've made a higher high. We've established a lower low relative to the low made in December. And at the moment, we're really struggling to take out the highs made in January. Of course, this can change, but at this particular location, this is where we expect sentiment to shift and to start seeing some very bearish candlesticks come into the market. Again, what we want to see, if this is a terminal reversal pattern, which we call a head and shoulders pattern, is for the volume to sort of dry up during a bullish move, which it has, and then we expect the volume to start picking up at the turning signals or the turning point before the bearishness resumes into the market. And as you can see today, again, we've had a volume spike of at least 2.5 times the daily average volume, which is what we expect to see during these terminal reversal patterns. Although the candlestick itself is largely bullish, within the last approximately 1 hour of the trading session, we'd really given back half of the actual gains made in the morning. And really, the volume is outstripping the volume of that bullishness which occurred in the first 30 minutes of the trading session. Very interesting signals if you take a look at the actual intricacies of the overall market. Taking a look at the NASDAQ as well, slightly popping its head above, not too much to really talk about at the moment, especially relating to or pertaining to the NASDAQ. We are still eking out divergence. One other thing I might add is the fact that the three markets are still not in agreement. As you can see, the NASDAQ's breaking out. You can see it's made a new relative high, although we are staring in the face of bearish divergence, which of course is very bearish. The Dow Jones Industrial Average is really struggling again to take out that old swing high made in January, and the S&P again is really ramming its head into this upper resistance level. Intraday we did sort of move above this level, but again within the last hour of trading, a really big sell-off occurred on very strong volume. So there is quite a lot of sellers up around this level. So I mean, at the moment, risk reward, the upside anyway, especially on the Dow Jones Industrial Average and the S&P, is quite limited in my opinion. I do think the markets are overextended and they are setting up for some form of a retracement. Only time will tell. But as you can see, that's my views, my opinions on the market. And for the most part, again, we get this stuff very accurately anyway because of our technical analysis skill set. If we walk through some of the other details, you can see our exponentials are moving sideways. Not too much to talk about. We are stabilizing above the 3 exponentials, which is interesting. You can see the 100 and 200 are also slightly bullish, but if you take a look at the oscillating indicators, you can just see how overbought this market is. You can see the stochastics up here registering an 86 level above the signal line at 80. The RSI again really struggling to get into that overbought level, or it is very close to that overbought level, and from here naturally we get a turn down. And check out this divergence which has been setting up really since December. You can see even though the momentum is really trying to push higher, the MACD histogram is actually ticking down, telling us that hey, this momentum is really waning. We are set up very nicely for a rollover. Right, we've got our trigger down here at 15,961 in the event that this market does actually roll over and start to sell off. If that does occur, we've got some incredible downside projections in orange down here, which the market will take out and should take out in the coming weeks. Very interesting time to be trading the market. Taking a look at Apple anyway, not too much to report about here. We do have a little bit of a bullish candlestick. All in all, you expect that we are at some form of support. We've got the trade reset up at 522.40. Everything's looking good on Apple. Amazon again had just a relative inside day. We do have one white soldier candlestick, but again, it's at that support level where I expect it. We are very, very neutral. We've got our triggers here, 375 and also 335.20. Not a whole lot of action going on in Amazon. AXP, nice little bullish pop. You could bracket trade this. You could place a trigger to buy right around 91, but again, that upside is limited with such strong divergence going on, with this exhaustion gap also occurring in January. It's not a trade that I'm too excited about, especially on the bullish side as well with the market. So I've got this 87.66 bearish entry set up, and I'm just waiting for it to trigger. Baidu again appears to be rolling over, much like many of our other shares. We do have an inside day, or almost like a bearish engulfing. It isn't at the right location. We are not up here at resistance, but it is very, very close. Two triggers set up, 186.12 bullish and also 162.57 bearish. So that's our Baidu trade set up. Caterpillar again, just continuing higher. We've seen a little bit of a shooting star, or even a spinning top today on Friday. It's really a nothing candlestick. A little bit of dismal volume. This isn't the volume you'd want to be seeing on a breakout, right? It's not the volume you'd want to be seeing on a breakout. You really want that volume to be picking up, guaranteeing and really supporting the bullish price action. Again, we're just not seeing it on Caterpillar. FAS, you can see our neutral trade setup again on FAS, 89.32 and 82.55. It doesn't matter which way this ETF wants to trade. It does track the financials, but you can see some very, very heavy volume coming into FAS. And with that long upper wick today on Monday and then again on Wednesday last week, you can really see that there's obviously selling pressure right around this old resistance level here at $88, which we're really struggling to get above. Can we get above it? Yes, we can. But until price confirms, then hey, I'm still going to be sitting on the sidelines. Google eking above. It's still continuing. Again, I said to tighten your stops throughout our Pivot Point Pro over the weekend. And again, it's just another time to reward yourself. Move that stop up, move it up to the low of the candlestick today. Just lock in that profit because again, this market could really pick up and become quite volatile in the event that it decides to roll over. HD moving into earnings tomorrow. It's not something that we're looking at because, of course, we cannot quantify the earnings outcome. Very, very interesting. JPM, nice bullish candlestick today. Decent volume as well. We've had two spinning tops and also a doji candlestick over the past 2 days, or one of each, I should say, just above these, or really congesting above the exponential moving averages. During a sideways market move, we do not pay attention to the exponentials, but it is quite interesting to note. You can see our long terms are still supporting the trend, which is quite interesting. However, again, much like the common market, we are overbought. You can see the RSI, the stochastics, and also that very, very strong divergence taking place across price and our MACD indicator. Usually this sets us up for some form of a reversal, and if you keep that in mind, let me just show you again a potential head and shoulders pattern. We have got the trade set up here at 56.90 in the event that it decides to roll over. Other than that, we're just sitting on the sidelines. Netflix did trigger today. It triggered bullish here at 444.10, which is fine. That's okay. I didn't expect it. Having said that, we have set up some nice stair-step patterns right on those exponential moving averages, as you can see. So during a trend, we need to reset. We need to rest before we get the next bullish move higher. And again, Netflix appears to be breaking out, which is very, very exciting. Again, tighten your stops, move it to the low of today's candlestick, and then move it up in line with either the 10 or the 20 once price confirms the bullish breakout. Interesting, interesting, interesting. Starbucks, another trade which I was incredibly excited about over the weekend. I brought that to your attention. We had this bearish setup here at 72.34, trading down to at least $70.43 a trade. A share. Today we were triggered technically. Yes, we are in this position, and yes, I'm still comfortable with it. Let me go through the actual technicals about that. Not only is the market appearing to roll over, but Starbucks itself is transitioning from a bull trend into potentially a bearish reversal. We've been establishing higher highs and higher lows, as you can see, as the trend has progressed. We've got into a funky sideways market movement up here over November and December, and now we've really started to set up lower highs. You can see 1, 2, and 3, and then if I change the font and go 1 and 2, you can see we're actually transitioning into what could be a downtrend. Now, yes, this has confirmed the reversal, and again, this is very similar to where the market is trading at the moment. If this is the market, you could say that this was the little congestion zone that we're going through. We've established that lower low, we've made that lower high, everything's set up for it to roll over, which is very, very interesting. You can see it's getting rejected at the 50 exponential moving average, which is what you expect. They will act as resistance in a bear market. However, the only thing holding up Starbucks at the moment is this 200 simple moving average. If selling pressure comes in the market anytime this week, look for that 200 or at least the low of the doji candlestick today to be taken out. You can see again our oscillators are confirming this. We're at overbought levels, crossing down. The RSI is tanking. MACD is slightly bullish. However, having said that, the histogram is ticking down. The signal line appears to be crossing. Again, the slower line on the MACD telling us that, hey, momentum wants to move lower. ADX is down here. It doesn't like the move yet, but this is where it'll turn up and tell us that, hey, the next move will be, of course, supported by the ADX. CCI is breaking the 100. Telling us that it's incredibly weak and it's a good opportunity to start shorting or entering into puts. So that's a brief market update anyway. Thanks for tuning in, ladies and gentlemen. Again, I am worried about this market. I'll keep you updated throughout the week. But having said this, have a good trading week. Have a good night. And I'll be back with you on Wednesday afternoon or Wednesday evening to address the market and what it's done on Tuesday and also Wednesday. All the best, everyone. Goodbye.